Hello. Good evening, everyone. This is your friend Vivek Bajaj, co-founder of Elon Markets and Stockage. Amazing ELM live and this time roundtable. Wednesday evening is reserved for me. I get an opportunity to interact with you guys, and I bring with myself. I onboard few people whom I really admire, whom I really love, and the work these people are doing is so incredible. India is such a lovely country. I mean, the whole influx of new generation traders has brought so much in limelight that I feel so excited that I've been part of their journey as well in some form. Let me welcome these two guys, amazing fellows who are doing such a lovely work in the domain of trading for themselves and for the other people as well. I would have loved to call them Jay Viru ki Jodi, but it's not Viru, it's Gomti today. So let me welcome Jay, Nifty Wizard, and Gomti. Good evening.
Good evening, Chandran. Good evening.
Awesome. So it's always good to interact with both of you. You guys are so solid in terms of your understanding of the subject where you deal with. Thank you.
Thanks for having me, sir.
Great. So let me just inform you about the flow of the discussion. So because it's a round table, so and we have kept a very specialized theme today, option buying. So we will give you guys enough space to talk about your point of view with respect to option buying and also using your strategy which you use for your bread and butter. Gomti obviously is specialist in CPR and Jay the Nifty Wizard, he is specialist in market profile. So we are going to have very interesting conversation, friends. Their style plus option buying. Can we make money? And should we look at this as well? So interesting. So tell me, guys, how is market treating you first? You, Gomti, would you like to go first?
Yeah,
How is market treating you these days?
yeah. Market is bullish from this new year. Now the Omicron is spreading everywhere, but the market is not carrying at all, and the market is going on the opposite side. So the market is always supreme. Technically, I feel Nifty and Bank Nifty are turning into a bullish mode as per technical analysis, and we are having a bullish bias already for past week. From the past week, we are always bullish in Nifty and Bank Nifty. So market is bullish and is heading towards 52 week high.
All right. So, I mean, Gomti means business. So, the fact that I wanted him to talk about how is market treating him, he has already given us his view on the market. So, let me just go back to his that question. How was your last year? Tell me. Was it productive? You made money. How was it overall your experience?
Yeah, last year it was a very profitable year, and only during the first of the pandemic situation, the market was a little bit sluggish, and after that, in the mid of the year, the market was super bullish, and market made a new highs, all-time highs. So overall, it is profitable.
So for me, 2021 was the best year of my career because I think 2020 I was good, but 2021 I think was a trader's paradise. Do you agree to that?
Yes, I agree. In
Yeah,
terms of investing as well as trading as well.
yeah, absolutely. Jay, I want to listen from you. You remain low profile as always. So tell me how has been your profitability last year?
Yeah, so uh, 2020, I mean, it was like a huge loss for me, as in, had, the backbone of myself, dad had expired. So, coming out of that is a very real task for me. I mean, I couldn't focus on a lot of things, emotional pressure, being an elder son in the family. I mean, it's been a pretty tough year for me. 2021 is a real tough year for me. Still, if you ask me, I mean, whether I record from that, say some 50 or 60%, because he was the one who cheered up me when I had such a big loss. He cheered up me. I had emotionally, he backed up me when no one had backed up me. He was the one who had backed up me. 15 days I've been with them. I mean, I saw the pain. Uh, uh, Literally, the last breath I was near him. I couldn't come out of that. Frankly speaking, I couldn't come out of that. Trading was not well with me for 2021. To be frank, 2021 is not a better year for me. But I had learned a lot of lessons personally, as well as how to come up in the difficult situation when someone won't be there with you all the time, how you need to cope up there. The same thing. I mean, like, I learned that lesson. Loss will be a loss. You need to learn what you need to get from there. Uh, and then you need to find the solution. I mean, like, you can't, some losses are replaceable actually, but you can't sit there, you can't keep on thinking about that, you need to come out of that. So I was very low profile last year, so probably 2022 looks better to me. I mean, like, so I need to come up very strong, because 2018, you know, right? I mean, like, when we met at Kolkata, that was a fascinating year for me. After that, I was like hitting here and there. Probably 2022, I expect a kind of volatility to be kicking in. So this year looks to me a better year. So hopefully, I'm starting very slow. Probably, let's see, Vivek. Thank you.
Absolutely amazing. It takes a lot of guts to talk about losses, be it financial or personal losses in the public platform. So that's why, Jay, we really appreciate your openness with us. And I'm sure this year is going to be the year of recovery for you in all fronts. So best of luck from my side, because you have a very strong understanding of your subject. So I'm sure you will come back very strong. All right, so let me just change the tangent a bit and talk about option buying. And I recorded a video with Asit in face to face where we talked about option buying, and he's such a strong supporter of his theory of option buying, because so far we all know and we all have experienced that option buying is a low probability profitable event. Option selling makes most of the profit. Even I used to believe that way. But after a couple of interactions with Asit and other kind of people, I started believing that if you do it the right way, yes, option buying can also make money, even though it's a less probability. So let me start with Gomathi on this, that your model of CPR, which I really admire your model. You have done such a great work in decoding that model in face to face as well. Can you actually say for somebody that making money using that model with option buying is possible? And if yes, give us more idea about that. If you want to do a screen sharing or anything, feel free to do that. Take us through that journey of using CPR and making money by buying options.
Okay. So personally, I'm an option buyer. 80% of the time, my trades rely in bank nifty options buying, and 10% of my trades goes to stock options swing buying, and I never sell options in stocks. And the remaining 10% of the trades goes to option selling, and that option selling, I'm new to option selling, and I do a lot of trial and testing trades. And so 80% of the time I'm an option buyer, especially I'm good at scalping, and mostly I trade in bank nifty. Now coming to options buying, how I am making bread and butter, I personally use CPR indicator and moving averages for identifying the trends. As you said just now, even option buyers can make money if they are having the patience to focus on the high probable trades. Even though option sellers are dominating the market and they are the winners in most of the cases, option buyers can make money if they are having the patience to focus on the right trade setup. Option buyers cannot make money every day. Option buyers cannot make money in every trade, but they can make a hell lot of money. But if they are having the right patience to focus on the right setup. Personally, what I do is I focus on narrow CPR stocks. Let me share my screen.
Yeah, yeah.
So what I do is I personally use this CPR indicator, and this is coded by me in TradingView. What I focus more is I focus on narrow CPR stocks, and I focus on the overall trend analysis. Let's say, so for example, Bank Nifty was looking bullish to me, mainly because of two reasons. First one is there is a usual trend line breakout in the daily charts. Now, the second, this is the first reason, which is the basic reason. Now, the second reason is I use Dow theory for additional confirmation. Without Dow theory, if you ask me to trade, then I will not trade at all. So, when it comes to price action, CPR indicator alone does not give me the solution. CPR indicator, along with moving averages, along with overall trend analysis, along with Dow theory, these all gives adds up to the trade conclusion. So here, what I am identifying in Bank Nifty is I am getting repeated lower highs. Whenever the market retraces back, I am getting repeated lower highs. So this was the last lower high. After that, there was a bit of consolidation and there was a breakout from this particular zone. So this zone was fascinating me because uh, there was a big support zone in that particular area earlier. So this is a, strong support zone for Bank Nifty. Somehow I am expecting a bounce from Bank Nifty, but my only concern is will Bank Nifty take so many months like this to recover from that zone? What I was expecting is Bank Nifty might be sluggish as before for another couple of months, and then the bull rally may continue. This was my perception. But what happened? Bank Nifty started its rally well before 1 week itself. Just a 1 week of consolidation, and then the Bank Nifty started to lift up its rally. So there was two confirmations for me, nearly three. There was a trend line breakout, and there was the Bank Nifty was bouncing from this zone, and Bank Nifty is this is the last lower high. When it comes to Dow theory, when the last lower high is broken, we can take a long entry. This is the Dow theory, a major concept. So when it comes to when it comes to Bank Nifty daily chart, this is the last lower high, and that last lower high was broken. Now what I did is I am drawing a line in that last lower high. So this is the last lower high. There I can see double tops, couple of double tops in this last lower high. So here there was one top, and here there is another top. So double top has been formed. Now Bank Nifty is breaking this important resistance level. So now what I'm doing is I'm coming down to a lower time frame, that is 1 hour chart. Now in 1 hour chart, exactly at the same line where the double top was made, I am seeing higher lows. This also corresponds to Dow theory. For example, this was the last support taken by Bank Nifty. Now the support is going higher. Previously the support was somewhere around 34,000, and now the support is going somewhere around 34,600. And similar way, once again the support is going higher, and this time the support is somewhere between 34,800 or 35,000. So what's happening? The prices are getting compressed exactly at this important last. This zone is last lower high, and this is the higher lows in Bank Nifty. So when this level is getting compressed and when these levels are getting broken, here comes my entry point. And very clearly on 31st December, Bank Nifty was taking support exactly on this particular important resistance. So now what's happening? This resistance has turned into a zone finally, and I have discussed this concept in my YouTube videos many times. Whenever resistance turns into a support, there is a higher chances for bullish market. And now on 1st of January, Bank Nifty is breaking this important trend line level. So this is the major confirmation for me. So right from the last week, I was having a bullish bias, but I was reluctant because of the historical support zones which was happening over here. Though I was expecting a bullish move, what I thought is, but there are chances for a couple of months range bound market as well. So I was having a 50-50 chances. The market might be bullish or the market might be range bound for another couple of months. This was my expectation. But when Bank Nifty gave a breakout from this important trend line, I was very enthusiastic and I was happy to take position. And I can see the bullish rally. Bank Nifty has almost From this breakout point, Bank Nifty has rallied nearly 6%. So this one move we have captured in this new year. So this new year is a very good start for us as an option buyer. Now when I'm using when I'm planning to take a entry, now I use 5 minutes chart and I use CPR indicator for confirmation. Now I am getting my entry point on 1st of January and 31st December. The market is giving me hopes by taking support at the important resistance level. And we can clearly see the breakout happened on January 3rd. Now, what I'm doing is I'm switching on my CPR indicator. Now, what I will do, I want the market to sustain above the daily CPR. These three blue color lines are called as CPR levels. I want the market to sustain above these three lines. And if the market is sustaining above R1 and previous day high, then there is a higher chances of the market to be trending. So this is previous day high. The black color dotted lines is called as previous day high. And this R1 is pivot level. Now, what's happening? The candles are sustaining above CPR. That is the first confirmation. Now, the candles are sustaining above R1 and previous day high. This is the second confirmation. So, what we will do? We are happy to take a call option buying, and we are aiming for a target of R2 for, in case of a quick scalping. If we are aiming for a bigger targets, then we are ready to wait for R2, R3 50% level. So it takes less than 1 hour to make a good profit. So this is the area which we are targeting, the area right from the day high breakout. So the market has broken R1 and previous day high exactly in this candle, and day high of that particular day also broken, and that too by a strong bull candle. So this is how, as an option buyer, we take a trade and we do a quick scalping and we exit around R2. In options itself, we are able to capture 50 to 100 points very easily. And whenever the market is giving a fresh day high breakout, because the market has already broken the important levels as per technicals. So now what we will do, every retracement and every pullback will be taken as a long opportunity. But we focus on high probable trades, so we will not take long whenever there is a pullback. What we will do is whenever there is a fresh day high breakout, we take a long entry and we focus on the nearest CPR pivot level as our targets. And this is what we did for past 3 days. And on fourth January, the market was expected to be range bound because of only one reason, because of the wide CPR and the distance between R1 and previous day high. I wish to compare Jan 3rd and Jan 4th. The distance between R1 and previous day high on Jan 4th is very bigger when compared to the distance between R1 and previous day high on Jan 3rd. So whenever the distance between R1 and previous day high is less, we can expect a trending market. And we can take confident positions with huge quantities. Whenever the market is having a medium or narrow CPR, whenever the distance between the R1 and previous day high is very small, I consider this as a high probable trade opportunity. And whenever the market is having a wider CPR and whenever the distance between R1 and previous day high is very large, I consider these days as a low probable trade opportunities. So in this case, whenever there is low probable trade opportunity, what I do is I try to avoid taking position. If the market is giving me the opportunity to take position, then I will trade with less quantities. And in case of a high probable trade opportunity, I will be happy to deploy more than 50% of my capital, and I will be happy to wait for a bigger targets. So this is the main mantra which we follow as an option buyer. If there is a low probable trade opportunity, trade with less quantities, or better to avoid trading. When there is a high probable trade opportunity, we are ready to deploy more than 50% of our capital and we are ready to take position. Now, today, so yesterday the market was having a range bound market. The main reason, what I guess, is already the market has rallied too much on 3rd January. And on 4th January, there is a wider CPR. The distance between R1 and previous day is also wide. So, what happens? There is enough room for the market to play inside this range. Yesterday, the maximum time the market spent inside this range because there is more room for the candles to play inside. And today, the market is the replica of 3rd January. We can compare 3rd January and 5th January. There was a couple of bear candles today in the morning, and then there was a rally. And today, the market sustained above R1 and previous day high, similar to 3rd January. So we can see clearly. Let me delete all the levels, or let me draw a zone with a different color. So I'm giving a pink color background for this zone. So here the candle was sustaining above R1 and previous day high, and there was a small bear candles. Same way, the market was having another setup on today. So the market was trading around R1 and previous day high. There was a couple of bear candles. So today also we can compare yesterday's R1 and previous day high and today's R1 and previous day high. So what's happening? The range is getting reduced, and the CPR level is also little bit narrow compared to yesterday's market. So we are expecting the market to be trending, or at least the market should be less trending. Even though if the market is not moving more than 2%, at least 1 to 1.5%, there should be a bull rally in Bank Nifty. So this was our expectation. But what happened? The market is sustaining above R1 and previous day high right from the morning, and the market is breaking the day high at 9:45. So at 9:45, the day high was 9:25 candle. This doji candle is the day high at that point of time, and that day high was broken again by a Bahubali candle. So this is what I call as Bahubali candle, because this candle is fat green candle. So whenever I see a fat green candle giving a breakout, or whenever I see a fat red candle giving a breakout on the downside, I consider it as a Bahubali candle because it is having the potential to break the resistance, and it is trying to take the market higher and higher. So today the market was sustaining above R1 and previous day high, and there was a fresh day high breakout with a strong bull candle. So here we take a trade, and we are easily making money in between R1 and R2 50%, because in this 50% itself, we almost get 100 points in options. More than 50 points, more than 70 points is enough for making some good money when we are playing with 10 to 20 lots in Bank Nifty. So this itself is sufficient if we want to make bread and butter in markets. So this is my observation. So if I am taking a trade in stocks, generally what I do is I scan for narrow CPR stocks. This is Chanting website. I am already having a scanner for scanning the narrow CPR stocks, which is going to be narrow for tomorrow. For example, JSW Steel. Yesterday, I was observing JSW Steel from these list of stocks. So JSW Steel was having a very narrow CPR today. So it was in my radar, and the setup was also bullish. Let me go to daily chart in JSW Steel. So this is the setup in JSW Steel. JSW Steel is having a similar kind of trend line. Just now I showed the trend line for Bank Nifty. The trend line was broken, and there was a Dow theory kind of formation. Now when it comes to JSW Steel, again I can see Dow theory formation. I am getting lower highs repeatedly, and now there is a zone formation, and now there is a higher low formation. For example, these are called as lower highs, lower lows. So these are called as lower highs, and these are called as lower lows, because the support is going lower and lower. But now we are seeing a higher low formation. JSW Steel is supposed to come down and make a lower high. But instead of making a lower high, what's happening? JSW Steel is making a higher low, and there is a lot of consolidation. So there should be some breakout. Either JSW should go up, or it should come down and it should touch this trend line support. But what happened? JSW Steel is giving breakout on the upside. Now, to take a early entry, what I do is I go to 1 hour chart and I check for more confirmations. So just now in Bank Nifty, we saw higher lows in 1 hour chart. So same kind of higher low formation was there in JSW Steel, and resistance is turning into support in JSW Steel yesterday. So, very simple observation. There is no rocket science, simple technical analysis, price action patterns, and then taking entry based on CPR indicator. So, yesterday, actually, yesterday I was expecting JSW Steel to be trending because already there was a breakout, but that did not happen. Hence we got narrow CPR today in JSW Steel. Since yesterday's market was range bound, it led to a narrow CPR day today. We can clearly see the zone. JSW Steel is taking support at the zone, and JSW is sustaining above the daily CPR throughout the day. Though JSW Steel was range bound, it is having the energy to sustain above the daily CPR. Whenever the candles are sustaining above the CPR level, it is expected to be bullish in coming days. And even we can see on the previous day, JSW Steel was taking supports repeatedly at the daily CPR, and now I am seeing a higher low again and again. And when the day high is getting broken, there was a strong rally in JSW Steel. So same thing happened yesterday. JSW Steel is having the capability to sustain above the daily CPR. And today also, JSW Steel sustained above the daily CPR, and it is sustaining above R1 and previous day high. So Bank Nifty and JSW Steel are having a similar kind of setup. The price action is coinciding with each other. So JSW Steel is sustaining above R1 and previous day high. After that, there is a very minor pullback. So every fall or every pullback can be taken as a buying opportunity if the candles are above R1 and previous day high. And when the day high is broken, we consider it as a Bahubali candle. This is what I said just before. This is called as a Bahubali candle because it is breaking the day high comfortably and there is a strong bull candle. After that, we can see the rally in JSW Steel. It almost crossed R4 level. R4 is the highest resistance level for intraday, and it has crossed R4 level very beautifully. So the idea which I follow is simple technical analysis, small price action patterns, and I repeatedly follow that again and again. So Dow theory is also equally important. That's what I said just now. If I am asked to trade only with CPR indicator, I cannot do that. If I'm asked to trade only with Dow theory, then I cannot do that. So price action is what everything is put together. CPR indicator, moving averages, and all the price action patterns like support turning into resistance turning into support, and trend line breakouts, and these range breakouts, and that is what I call as Bahubali candle breakouts. And then these Dow theory, higher lows, lower highs, and minor pullbacks, candles sustaining above daily CPR, candles sustaining above previous day high and resistance one. So these are the major areas which I follow. If all the things are coming together and if it is satisfying, then I will be happy to take position. So this is my trading style as an option buyer, and this is how I am making money. And every day I will not take a trade. That is the main point I wanted to tell here, because now Bank Nifty is giving a good trade opportunity this week, so we are making money. But last month, when the market was a little bit choppy and it was volatile as well. So what we do whenever the market is volatile, whenever there is a low probable trade opportunity, even I never try to scalp 10 or 20 points in options. I don't like scalping 10, 20 points or 30 points in options. I always aim for 50 to 70 points or 50 to 100 points. And I wait for a high probable trade opportunity most of the time. Even my YouTube followers and my students know very well. I follow only high probable trade opportunity. Other days, I am just off from the market. I read some books or watch some videos related to stock market, and that's how I spend my time.
Awesome. Every time I hear you, I get mesmerized by the content you have, the knowledge, the depth you have at such a young age. But we are talking about option buying. So tell me, when you buy the option, which strike price do you select at the money, or you try to select the strike price, which is typically the target price of your trade?
No, always I select deep in the money. Almost five strike prices deep in the money I select. So in order to escape from premium decay and in order to get quicker profits.
Okay, got it. So, Gomti, great. It was amazing interaction. We will take questions from our audience later. And let me tell you that I've been watching all your webinars hosted in Elon Markets, and I've learned so much from you. And I'm very excited for that 20th Feb webinar, which you'll be conducting with us. Very, very excited. I think you're going to talk about CPR and multi-time frame CPR, right?
Yes,
Which
actually,
is
I wanted to tell about that. Actually, I have never spoken anywhere about CPR, especially in multi-time frame analysis. And that is the first webinar I am going to reveal CPR indicator in multi-time frame analysis to take more high probable trade opportunities and in order to make some handsome profits. So that is
awesome.
the first webinar I am going to host CPR indicator in multi-time frame analysis. Even in my YouTube channel, I never done any video related to CPR, especially in multi-time frame analysis.
Awesome. So we are very happy that Elon Markets have got the opportunity to host you again. So looking forward to that webinar, seeing that one again, and learning from you. Now let's go to Jay, Nifty Wizard. So Jay, what's up? What's happening with Market Profile, and how are you buying options using Market Profile?
Yeah. So, why option buying? I mean, like, okay. So, can you share my screen?
Share the screen. Yeah, I am so eager to see that Market Profile screen once again. Show me that screen. It's been 3 years.
Yeah, yeah, yeah. One second. Okay. And now, can you able to see the screen?
Yep, yep, we can see that.
Okay. So, why option buying? There are two reasons. It could be funny. One reason could be funny. There were some writers challenged me that option buyers never make money. Okay, so that was the one thing which made me to get into the subject to understand what are the reasons or why most of the option buyers fail. And the second reason is I had seen a lot of good option buying friends who makes very good money, and I see the potential uh, over that. So these two things that pulled me inside option buying to check what are the essence of uh, things to watch in option buying,
Mhm.
why most option buyers fail, how the price, I mean, like sentimentally change their psychology actually.
Mhm.
Uh, for example, uh, let's say this is 17,800 call option, this is 17,800 put option.
Mhm.
So how our mind thinks. Let me put a gist. So here, something which was quoting at 500 rupees, okay, somewhere close to 500 rupees, all the way right now it is quoting at 16 rupees. Okay.
Mhm.
So psychologically, how our mind thinks is because typically the mindset of a human is like a bargaining mindset. When something which quoted at 500 rupees, if you saw somewhere close to this, your mind labeled this as a cheap. Your mind labeled this as a cheap. So what your mind inclined to do is, hey, go and purchase it because something quoted at 500 rupees, it is very cheaper. So that's the reason you see most of the option buyers, when market goes higher, they love to buy puts than calls. No one love to buy this call where it was quoting at 5 rupees. It was quoting at 5 rupees before, I mean, like 2 days before, which is quoting at 125 rupees, nearly about 5 times. Sorry, not 5 times, even more than that. When they see this, what they feel is they feel like this had come from here. Why should I take this much risk? But I will tell you, on my experience of 2 years in option buying, what goes higher have 70 to 75% probability of going even higher. What comes lower have 75% probability of coming lower.
Hmm.
So the main reason why an option buyer loses is the simple reason of trying to buy something cheaper. And I want to put something very interesting thing here. You mark any option range of first 1 hour. Okay, this also I never thought anyway. I just put a gist of this. Okay, an option price which struggle to cross its first hour high, okay, have a high probability of scaling down. You take any day which never able to cross its first hour high. I'm talking about option pricing, the price of the option which never able to cross. So the reason why I say the simple rule, if someone uses the simple, very simple rule, when market trades like this, okay, so basically we have a simple rule like this. Uh, every day we will generate three levels on market profile. One is value area high, one is POC, and one is value area low. So on any given day, this rule goes very simple. When we are trading, when we are auctioning, I'm talking pure on option buying. Okay. When you are trading above previous day's value area high, when you are auctioning, when the price is auctioning above previous day's value area high, try not to buy puts. There are few times, I'm talking about probability. Out of 100 times, 75 to 80 times you will fail. The puts won't pay you the money. Rest 20 times it will pay you the money, but not a bigger money. Out of 20 times, 10 times it might pay you the money, or 15 times it might pay you the money, 5 times it might pay a bigger money. But as an option buyer, I had found one more strange thing as well, because every day an option price moves. Okay, so again this puts into your mind that you want to come and trade every day. Rather than that, if an option buyer focus on these kind of big days, I won't term this also, these kind of big days. If an option buyer focus only on these days where he tries to enter a position here and he try to maximize this profit till the end. Here, one thing is he goes with the flow, and second thing is he never micromanage because he predicts a trend day where he makes maximum out of the money. The pitfall of option buying is, let's say you make 100 rupees in a day like this. Next day you come and trade. What you think is, even on this day you expect this kind of move to happen. But
Yep.
what they do is they won't do that. Probably they will move here, they will come down here, they will chop here. Later, whatever move you expect will happen. In this choppiness, you will lose at least 70 to 80% of this premium which you collected previous day. So at net, you could be on this 2 day rather than being plus 100 if you avoided this day, where you will be sitting as plus 20 or break even, or sometimes even loss. So that's why you need to make a framework in option buying when you need to come and trade. Okay, this day I will trade Nifty. Okay, the very next day I have set of say like 20 stocks in that which is trending. Okay, I don't want you to enter even here. Even if you enter here, let me split the profile. Yeah. So even I used to say this always. Don't worry about missing this move. This move is a confirmation for this move. So you try to enter here. You have a very minimal stop loss. Very minimal. Your stop loss won't be here. You will have a very minimal stop loss. Here, if you see, here you will be your entry. Here will be your risk. The risk reward will go somewhere close to 2 hours. So as an option buyer, only one thing is find where the momentum will be. Okay. Once you start practicing and trading only the momentum triggers as an option buyer, what you will do is basically you won't try to fade the momentum. You won't try to buy a put option against the momentum. You will just join it. So that will give you an edge of making profits, because as I said in the beginning, an option price which goes higher on that particular day have a higher chance of going higher, 75 to 80% of probability of going higher. An option price which is coming down have a higher chance of going down further. So the simple rule is, don't buy a put option when price is away from previous day's high. Don't buy a call option. For example, day like this, people can argue, day like this, yeah, day like this, people can argue, Jay, if I had bought a call option here, if I had bought a call option here, I would have made big money. I will tell you, if you had this mindset, if you had bought a call option here, you would have definitely bought a call option here. You would have definitely bought a call option here. What would have happened is the call option which you bought here would made you zero. You would
True.
be you would be defending about this move, but what happened? You see, the same psychology would have played here. The same cycle. What I am saying is, leave the market to show you the sign. I don't mind missing these moves. I don't mind missing this. Yeah.
Hmm.
So I don't mind missing this move. Let it. Because the option pricing, I will tell you, you will get at the same price even the very next day if it opens here also. That is the magic of option buying. You don't worry about will it go without me. Never have that belief. As an option buyer, you will always get that price. For example, if an option price of 16,700 call option, if it quoted at somewhere close to 50 rupees, you would have got at 65 or maximum 70, not more than that. But you had this confirmation, then you are entering a trade. So if someone follow this rule, if someone follow this simple rule, he will definitely uh, make good money in option. Okay, coming to Bank Nifty, the trades which I had taken this week. So this trend day was easily projectable. The trend day on this day was easily projectable. Yeah. So again, the same thing. As an option buyer, I have a rule of not entering a trade till 9:45. Till 9:45, I never enter any option trade. The rule book goes like that. So here we saw something trending. Here we entered with a very minimal stop loss on this day. So these kind of trades where your effort will be very less. Why trend days? Trend days, you make an entry, you place a stop loss, you keep calm. On trend days, I bet most of the trend days won't take previous TPO lows. If you see this, none of the previous, okay, I will zoom it and show. Yeah, this is the day. Yeah, this is the day. So the classification of trend days, none of the lows of previous TPOs had taken. Nowhere it had taken till the close. So what you do is, obviously, once the IVH is broken, okay, so this gives me a confirmation. Here, somewhere on the pullback, we will enter. We keep trialing it on all the previous 30-minute TPOs. Okay. So rather going and looking for trade every day as an option buyer, look for trade like this. A simple trend day. A simple trend day can make a very big difference. A very, very big difference. Okay. Okay. Coming to this part, again, broken the rule and got paid off. Okay. So yesterday, what I was expecting, this was a zone where we were testing the zone for the first time. Okay. Let me put a candlestick chart. Yeah. Here. Yeah, exactly. So this zone, 14th December and 16th December, this was a balance. We termed this as a balance. This was a small balance here. So we were testing this zone, okay, and we got a nice rejection here. We got a nice rejection here. So I want to take a put option, but only one thing is, as the rule goes, when we are comfortably above previous day's value area high, you shouldn't attempt to buy a put option. Okay. So that is our rule. I mean, like when we are above previous day's value area high comfortably. So the price was somewhere close to this. So the distance is very big. So we were not inclined, but still, as I said, the monkey mind want to get into a trade. So here, what I had done was, rather than going into a full size, I just went for a test size trade, a short trade with a test size. So here I was expecting two things to continue this trade. One was a flat open rather than a gap up, or a gap down open to continue this trade. None of these two things happened. It came, it tested this HVN, yesterday's HVN mark. This is where most of the trades had happened on 4th Jan. Okay. It came down, it rejected, it went up. Here I gave up my stop loss for the test size quantity. Either if it opened flat, if it drive, I would have added. If it did a gap down, or if it test, I would have added with a stop loss above this. None of the thing happened, and it started scaling higher. And moreover, today I couldn't enter into the trade. Why? Because VIX was the first factor, and second thing was, this was the zone where we had a lot of supply coming inside. So this was the zone where market had cracked nearly straight, nearly about 3,500 points. So we are testing the zone for the first time. We are testing this zone for the first time. So reaction will definitely happen. Either tomorrow we can have a gap down open, or even if it opens here, goes down, a sudden sell off likely to happen. Okay, either of these two things. So that is the reason I couldn't enter any of the, because at any day I will see the trade location where things are happening. I don't mind missing this move, fine, because this move had happened, but most of the time what will happen is something like this: a gap up at a supply zone, sudden fall, because you can't manage your risk as an option buyer properly there. Let's say yeah, let's take this. Yeah, let's take this. Yeah, fine. So here, the same thing. If I felt it is going to go up, let's say here I'm entering at, say, like 100 rupees. Let's say it's at 100 rupees. It went all the way towards 130. Okay. But I don't know this can hold out here because of the trade location on futures. Trade location on the future, I don't know. But this trade was not a big deal. The other day, the Monday trend day trade was an easy trade, because here if you see, there are nothing to stop this rally. There is no trade location. Once it started here, we got is a trade. Next level is here. So this was an easy trade because you need to check whether you have a barrier or not. Fine, if you had entered here, again I said it would have stopped here. You never know. Most of the time it goes up, all of a sudden it pulls all the long end, suddenly it will crack. So I don't want to enter any long at this zone. Even it is going to pay me big, fine. Now what I will do, when I will enter long, let this zone goes much further. The more it travels in this zone, the more conviction on longs I will get. On the next pullback, I will wait and I will enter a long here and I will drive. So that's why I say, as an option buyer, allow something, allow the price to travel. This travel, I mean, like how our mind think is 100 rupees to 70 rupees. Hey, it is cheaper. Okay, let's buy at 70. But this have a probability of going further down to 50 rupees. Okay, I will add further more because I don't want to lose, because me and markets want to fight with each other. You or me. How you can win over me. So here I will add. Here I don't try to add looking for a win. I want to get out of a minimal loss. The more the position goes away from you, you lose your winning mindset rather than you will get into a not to lose mindset. Both are different. What I say is, what I found is, if something quotes at 100 rupees, if it goes to 150 on a pullback, sorry, on a pullback, oh, 1 second. Yeah.
Jay sir, you have to pick the dot. The
Which one?
dot over there. Below the eraser on the epic
Okay.
pen.
Oh, sorry. Thank you. No. So what I found is, when an option is quoting at 100 rupees, if it goes to 150 on a pullback, if I buy at 120, this have a higher chance of going towards 160 or 200. Rather than something quoting at 100 rupees goes to 70 rupees, I'm buying here, this have a higher chance of going to 50 rupees or 60 rupees. Out of 100 times, 80 times this happen. Only 20 times this 50 can go to 70 rupees, and sometimes some 5 times this 50 can go to 100 rupees or 200 rupees. I don't mind, because the amount of stress you are going and adding onto the loser, especially on option buying, will make you more stress. And if you see, you will add up the position sizing huge. And the simple reason why many of the option traders fail is the simple reason they try to buy something cheaper. In option buying, cheaper never works. You want to stay ahead of the writer. The writer will write something which is cheaper, okay? Or find some zone where you have the defense action. For example, today evening we entered a Hindalco 480 put option. If you see Hindalco, yeah. So if you see Hindalco, 480 call option is the highest over. So this is where the highest over. It comes here, it rejected, it is staying here. And on the chart, if you see, yeah, if you see, this is the zone where Hindalco has started falling down. So now we are testing this zone. We are trading sideways. So here I will take a chance of getting into 480 put option at 13.45. I kept the stop loss at 10 rupees. I want to see how it goes above 485. The first initial target is 460. In case if I get a gap down tomorrow and price starts driving down, it will hit 470, and later either by Monday or either by Tuesday, I expect. So you need to look for, as an option buyer, this is the second trade. you have some defense zone where that zone won't take very easily. So take your risk on such a zones. You don't take trades here, you don't take trades here, you allow the price to come towards such a zone. If it comes here, let's say, see this, this is such a zone, this is a defense zone. If you buy a call option, your chance of lose, I won't say it won't go for a loss, but your loss will be very minimal. In case if it works, you will make some sort of bagger opportunities. So something like this, you need to wait, but that requires patience. So what people would have done is, after this move, they could have bought a call option here itself. They would have made money, but if their expectation here, they would have lost a lot of money. So that's why I say in a chart, mark some defense zones. So I call them as D zones. Defense, where the defense will come. So there, this option OI, high OI zones will come handy. You will get very easy trades over there. But price action, as Gomathi said, price action, first context. Context need to be above all. Then comes price action. Then you can take OI for the further clue. This is a very simple way of using option buying, but only one rule I suggest to you all is, for God's sake, never buy a put option above previous day's high. The underlying, I'm talking about the underlying. If Bank Nifty future is trading marginally above, this is previous day high, marginally above previous day's high, don't buy a put option. Yeah, sometimes it might pay, but that sometime which you make money, most of the time, day like this will take all the money tenfolds. Believe me, whatever money you make on those times, it will take all your money away. So this one simple rule, you take it and use it, and it will limit your trades. Rather than that, you won't fight the market, it will limit your trades, and that will help you as an option buyer to grow your account.
Fair point. I can see many reactions in the message window, and I want to talk about these reactions.
Yeah, please.
See, I have done almost 130 face to face, and while in the process of doing all these 130 face to face, I must have recorded videos ample number of times. There are some face to face I have recorded videos twice and thrice because I was not able to properly understand what the person is trying to say, or I was not getting the value. And I've developed a lot of patience after I've gone through all these. And generally, I have a lot of patience. And the reason why I go through all the content by people like you and Jay, including you, is because I know that half an hour of patience hearing to you will give me one point which will change my trading style. And all the people who have commented, they have missed that one point. And the point Jay was constantly telling us, and you guys were busy in making comments, and Jay was constantly telling us that one critical point, which probably you have not missed, but I have taken it. And I'm sure Gomathi is smiling, and he has also taken that point, and he's going to incorporate that point in his trading style. So, guys, tolerance is one of the most critical need of being a successful trader in market. Getting strategies and do trade like this, it's a very simple thing, but that doesn't make you the real trader for your long term. तो थोड़ा सा आप लोग पेशेंस रखिए, क्योंकि कोई भी कुछ भी बोलता है तो person has something, that's why the person is speaking. Okay, so anyways, thank you Jay, I got the point. And market profile, 3 years ago when we interacted, market profile is not an ordinary system. And that's why extraordinary people are using it and making a lot of money globally. It is not a system which Jay has developed. It's a global system. People make money out of it. So some people are saying that it's too complex. Sure, making money from market is complex. And if it is easy, everyone will make, right? Right? And today when he is talking about a system, it's not that the system was easy when he started. It's over a period of time he has realized that this is the way the system can be used in the most optimal manner. and he has been able to come out with that optimum number. So all I can say is thank you both of you. Before I close this, would you like to say anything?
Yeah, I mean, like as someone said, market profile is a pretty easy thing. Probably, I always say less is more in trading. Less number of trades, more number of, good money. Less number of trades is less stress. Same way, you need to know the critical point of a system. What you need to use. There could be a lot of other things. It should make you fit actually. For example, market profile would be used different way for Nifty future. Actually, it is can be used in a different way for Bank Nifty future because both assets are different. They have a different characteristic. You can't because one is a mean reversion asset, one is a trend asset. You can't club all the points in the same thing. So same way, you need to know is that useful for you. First point, as you said, I mean, like trading, people run for strategies. It's not strategies, it's your mind. Even if I say something, at the end of the day, you trade for your EMIs, you trade for your dream car, you trade for something else. That's the one thing which makes you going out of a process and doing something. So that's why I always say, first find what you want, never compare. If Jay does this thing, it doesn't mean you can also do. It can be better than something else. It can be more than better than what Jay does or what XYZ person does. Find it. We can show the light. At a road, we can show the light. This is where we came from. This is a jungle. We saw this many tigers, these things. So make safe from yourself. This is what we can say.
Sure,
But
sure. Okay.
yeah, it's up to you to find whether I need to see this path, I need to go this way. And thank you so much. I mean, like you are doing lot of what I mean, like a kind of mind opening sessions where I am seeing a lot of videos these days where people talk about probability. They are not bringing something just for the sake of bringing people for trading. They are talking about risk. They are talking about risk management. Why the sustainability is important. At the end of the day, whether you survive today to come back tomorrow is very important. Anyone can just open an account, place a buy and sell, and come back the way lose money. Anyone can do that. But for someone to make money, really requires a grit. It requires patience. It requires perseverance. A lot of things. Market will push you down. Market will make you feel ashamed before the crowd. But how you come up from that, it all required. No one can be right all the time. So it all develops from there. So one thing is be a one trick pony. In one thing, be a master. You can be extraordinary in one thing, ordinary in many things. So find that extraordinary thing, make your bread and butter there, and that is the way you can excel as a professional trader. Thank you.
Good, good, Jay. Thank you for this lovely conclusion through your wisdoms. And Gomathi, we need to close this. I have to thank you, and I'm looking forward to attend both of your session. Gomathi is going to take the session on 19th. Jay is going to talk about market profiles. His session is also lined up on 19th. Gomathi is going to take a session on 20th. So I'm looking forward to attend both of your session and learn more from you guys. Thank you so much for doing this one. I hope my learners of Elon Markets must have learned something because generally we have patient learners who want to learn things from us. Thank you guys. Thank you so much.
Thank you, Sajid.
Thank you. Thank you. Thank you, friends, for attending this one. See, both of these guys are doing so great work in whatever they are doing because both of them are specialized in one particular study. Like Gomti loves CPR and Jay obviously loves market profile. He has been practicing it. So both are specialized studies. So what I always tell this to my learners that it's not necessary that you can do all the things. But if you feel that this is one thing which you want to do, and if you want to excel in that, adapt to that. Try that for a couple of months. see whether it is suited for your personality. Like, for example, RS model is something which I adopted and I've been following it. CPR is something which Gomti adopted, and we are making money. We are there in the market, so we are obviously making money. Otherwise, market is ruthless to punish, people who are not correct. They are fake. So adopt one system, go deep inside that system, and make it part of your lifestyle. That is what I will always advise people to do, and it could be anything. And Elon Markets is committed to introduce you to various systems at the most cost-effective manner, so that you guys can truly get into that system at an advanced level as well, if you really want to adapt that system. Thank you. Good night, everyone. Take care, and looking forward to have you again in next session of Roundtable. Thank you. Bye bye. Take care.